IRS 2022 tax guidelines to treat NFTs as stablecoins, cryptocurrencies. As you all know, NFTs are not stable coins, even though we're in a bear market. I think the most interesting piece of this story is the IRS did not classify NFTs as collectibles like art or antiques, which are taxed at a different rate than crypto or stocks. Collectibles are taxed at 28% compared to stocks, bonds, or crypto, which is taxed at 0, 15, and 20%, depending on the seller's total income. There's a lot of problematic information here, and I really think what the IRS did is they says, we don't know what in the F is happening, so we're just going to go ahead and classify NFTs as stable coins to make it easier on themselves, despite them hiring, I think, like 50,000 plus new employees. I do believe that this behavior is problematic because NFTs are not stable coins. And we all know that stable coins are going to be placed under heavy regulation very soon because of the Terra Luna collapse regarding UST. So I am absolutely livid about this because once things are passed, it's very hard to get them appealed. Jen, I want your take on this because I know that you love NFTs just as much as I do.
I for sure do. And this is just, it sounds like a mess and a disaster. I wonder if as the IRS iterates on this, we'll start to see one-of-one NFTs look more like collectibles and the projects that have, 10,000 PFPs look more like digital assets. That's how the European Union is kind of looking at NFTs right now. We saw that in the MiCA draft. I think as it stands after reading the story, this is really complicated. How is the IRS going to oversee and govern this? I think about, someone owns jensenassi.eth. It's not me. If the IRS were to go and look at the wallet that has jensenassi.eth, are they going to assume that I own the NFTs in that wallet? It sounds like a total disaster. I don't know how people are going to report on this. I don't know how the IRS is going to verify who owns what. I don't think they know how they're going to verify it. So I think it's going to be an interesting story to follow. Will, what do you think?
I don't know. I kind of took this a different way than both of you guys. I think the fact that they moved forward with some sort of clarity pretty quickly in terms of how slow the IRS has been historically is notable, right? Took them about 2 years, a year to get something within their paperwork that goes out to every American every year on NFTs and how to classify them as tax. I think a lot of people who did their taxes last year would have appreciated this guidance before, and I could see a lot of people having to go back and now redo their taxes because they didn't really understand how NFTs were classified beforehand. And I do think like the market structure of NFTs, or for a lot of NFTs, does make sense for them to be classified as digital assets. So it's not just like stable coins, but they do trade like digital assets, right? They have a price floor. There's typically some sort of DEX you can trade them on. They're often very liquid, or at least like the better marketplaces are. And so there is an element of them being like another digital asset. Yes, to Wendy's point, a lot of these things are more collectibles. They are more artwork. Like if you're going to get something from one of the bigger collectors out there, I think that would probably fall more so into collectibles, and that would be taxed under that guidance. But I think to be fair, also, that tax guidance is normally pretty strict. And often even worse, right? Like inheritance taxes and all those things around selling artwork, that can be even worse than just selling any other good, like we see with stable coins or cryptocurrencies. So I don't know. I'm a little split on this one. Zach, I want to get your take.
Yeah, it's interesting to see the level of specificity here, right? So, they're grouping everything in the digital asset bucket, which sort of indicates some degree of sophistication, and how they're going to differentiate within that bucket, I think, is a bit of an open question. But, you have stuff listed here like staking rewards, mining, similar activities, digital assets being received as a result of a hard fork. So the level of detail that's being provided in this draft document stands out to me as notable. I don't know. I'd have to do a version compare to see if staking rewards was something that had been previously discussed. But the idea that this level of specificity is now working its way into U.S. tax law is notable, interesting, maybe a bit of that road to boring that we've been talking about a lot recently, right? Maybe the integration of this as just any other asset class that U.S. taxpayers have to account for with a degree of specificity that has previously been undefined. I think it's obviously going to be a bit painful getting toward that state of clarity, but maybe this is indeed a step in the right direction where each of these different flavors of digital asset gets a bit more specific treatment under current tax code. One would hope, at least. Wendy, I'm tossing it to you.
The last thing I want to say on this is recently it was reported that that a home was sold as an NFT or tokenized as an NFT and sold, I believe it was for $175,000. And if that is sold, like let's say you purchase a home, a physical property, but you're purchasing it as an NFT to showcase that you have the ownership, how is that going to be taxed, or how does that fit into this regulation? That's my only kind of point I wanted to leave at the end, because I feel like things are going to progress and change as the industry matures with NFTs. And I think the IRS, if they just put this out and they just say, hey, we're taxing them as stable coins, it's going to leave a lot of problems in the future.
I want to know where homes are being sold for $175,000. I want to go there.
In BFE.
All right.
Not Canada.
All right. We're gonna not in Toronto, that's for sure.